Welcome. In this episode of Venture Capital, How It Works, we're going to break down everything you need to know about crowdfunding. By the end of this video, you'll have a complete roadmap to launching your own successful campaign, raising funds from people who believe in your vision, and turning your idea into reality. But here's the thing. While crowdfunding can be an incredibly powerful tool, most entrepreneurs fail at it. They go in without a plan, with a weak story, and expect the money to just roll in. Don't be that person. So stay with me, because I'm going to teach you the exact steps to run a successful crowdfunding campaign. Avoid the common mistakes and maximize your chance of success. Let's dive in. First, let's get clear on what crowdfunding really is. At its core, crowdfunding is a way for you to raise money by asking a large group of people, your crowd, to contribute small amounts of money to help bring your idea to life. Crowdfunding is especially powerful for entrepreneurs who are just starting out, need validation for their product, or simply don't want to give up control of their company to large investors. It's a way to rally a community around your idea, and if done right, it can turn your backers into loyal customers and ambassadors for your brand. Let's briefly go over the three main types of crowdfunding. Reward-based crowdfunding. This is the most common type, where backers receive a reward for their contributions, usually a product or service that you're developing. It's essentially a pre-order system. Example, if you're launching a new tech gadget, backers might get an early version of the product or exclusive perks for their contribution. Donation-based crowdfunding. This type is typically used for charitable causes. People contribute simply because they believe in the mission and want to help, without expecting anything in return. Example, nonprofits and personal fundraising campaigns often use this model, where backers donate to support a cause such as disaster relief or a community project. Equity crowdfunding. Now here's the type of crowdfunding we're focusing on today. Equity crowdfunding allows backers to invest in your business in exchange for actual ownership, equity, in your company. This is similar to traditional venture capital, but instead of getting money from a few big investors, you're raising small amounts from a large group of people. If your business needs a significant amount of funding and you're willing to share ownership with your backers, equity crowdfunding might be the right fit. Equity crowdfunding is becoming a popular way for startups to raise substantial funds while maintaining a lot more control than they would with traditional venture capital. Equity crowdfunding is essentially the best of both worlds between venture capital and traditional crowdfunding. It allows you to raise money by selling shares of your company to a large pool of small investors, all through an online platform. Unlike reward-based crowdfunding where backers get a product or service, equity crowdfunding gives them a stake in your business. They become shareholders, which means they have a financial interest in your success. This model has been a game changer for startups, allowing them to raise significant capital without relying on a few big investors. Instead, you're getting smaller contributions from everyday people who believe in your vision. For companies that need funding and are ready to scale, this is a powerful option. So, why would you choose equity crowdfunding over traditional venture capital or other forms of financing? Access to capital. Equity crowdfunding allows you to raise significant amounts of money without the super competitive process of approaching venture capitalists. You're not limited to a few presentations to big investors. You're attracting a large pool of investors, many of whom will invest in your long-term success. Maintain control. While you're giving up some equity, you're spreading it across many small investors rather than handing over a large portion to a single venture capitalist who will demand input into your strategy and decisions. This allows you to maintain greater control over your business. Build a community of investors. Your investors aren't just shareholders, they're your biggest advocates. They have a vested interest in seeing your business succeed, which means they're likely to promote your brand, use your product, and help you grow. Market validation. Crowdfunding is a great way to test your idea and validate demand. If many people are willing to make investments, that's a strong indicator that you're onto something. Exposure. Running a successful crowdfunding campaign can generate significant buzz around your business. It's an opportunity to get media coverage, connect with influencers, and increase visibility for your brand. Lower risk. Since equity crowdfunding involves many small investments, the risk is spread out among a large number of investors. You're not relying on a single source of funding that could pull out at any time. Equity crowdfunding isn't just about throwing up a campaign page and hoping for the best. Because you're dealing with actual investment and selling shares of your company, there's a lot more involved in terms of documentation and compliance. Here's what you need to have in order before you launch. 1. Business plan. Investors want to know exactly what they're putting their money into, so you'll need a solid business plan. This should include your company's mission and vision, detailed financial projections, a clear explanation of how the funds will be used, your market research, showing there's demand for your product or service, and your growth strategy, how you plan to scale and generate returns for your investors. 2. Company valuation. You'll need to set a valuation for your company to determine how much equity to offer in exchange for the funding you're raising. This can be tricky, especially for early-stage startups, so it's often a good idea to get help from financial advisors or valuation experts. 3. Financial statements. Transparency is key in equity crowdfunding. Investors will want to see your financial history, including balance sheets, income statements, cash flow statements, and any existing debt or liabilities. Even if you're a new business without much financial history, you'll need to provide some form of documentation to build trust with potential investors. 4. Legal filings. Equity crowdfunding is regulated by the Securities and Exchange Commission, so you'll need to file certain documents depending on how much money you're raising. If you're raising up to $1,070,000, you can file under Regulation CF, crowdfunding. If you're raising more, you might need to file under Regulation D or Regulation A+. These filings typically include your financials, a description of your business, your fundraising goal, and the terms of the investment. 5. Offering memorandum. This is a key document in equity crowdfunding. It's a legal document that outlines the terms of the offering, including the amount of money you're raising, the number of shares you're offering, the price per share, and any risks associated with the investment. Essentially, this document is designed to protect both you and your investors by making sure everyone is on the same page about what they're getting into. All right, let's get to the heart of it. How do you run a successful crowdfunding campaign? The key to success lies in planning, storytelling, and execution. Here's a step-by-step breakdown to help you crush your campaign. 1. Research and choose the right platform. There are many crowdfunding platforms out there, but not all of them are created equal. Some of the most popular options include Kickstarter, which focuses on creative projects and products and is known for its all-or-nothing funding model, meaning you must meet your goal to receive the funds. Indiegogo offers both all-or-nothing and flexible funding options, allowing you to keep whatever money you raise, even if you don't hit your goal. GoFundMe is primarily used for personal causes and charity, but can be used for business ventures as well. Choosing the right platform depends on your product, audience, and how much money you're looking to raise. Research the platform fees, the success rates, and the audience to make an informed choice. 2. Build your community before you launch. This is one of the biggest mistakes people make. They launch their campaign without an existing audience. The secret to crowdfunding success is having a group of people ready to back you on day one. Start building your community months before your campaign goes live. Use social media, email newsletters, and online forums to generate buzz. Reach out to influencers or bloggers in your industry who might be interested in your project. The goal is to have people excited and ready to back you the moment you launch. A strong first day can give your campaign momentum, helping it gain visibility and attract more backers. 3. Craft a compelling story. Crowdfunding isn't just about the product, it's about the story behind the product. Why are you creating this? What problem are you solving? How will it make a difference in the world? Your campaign needs to capture the hearts and minds of your potential backers. Be honest, be vulnerable, and show them why they should care about your vision. Here are a few tips for crafting your story. Make it personal. People don't just invest in ideas, they invest in people. Share your personal journey and why this project matters to you. Focus on the problem. Clearly explain the problem your product solves. The bigger the problem, the more likely people are to back your solution. Incorporate visuals. A picture is worth 1,000 words. Use high-quality images, videos, and infographics to bring your story to life. A great video can be the difference between success and failure. 4. Set a realistic funding goal. Be strategic with your funding goal. Too high and you risk not meeting it. Too low and you won't have enough to fulfill your promises. When setting your goal, consider production costs. How much will it cost to manufacture your product? Marketing and sales. How much will it cost to build momentum? Platform fees. Most crowdfunding platforms take a cut of the money you raise, so be sure to account for that in your goal. Make sure your goal is realistic and achievable, but also high enough to cover your expenses and deliver on your promises. 5. Plan your marketing strategy. Your marketing strategy can make or break your campaign. You need to get your campaign in front of as many people as possible, and you can't rely on the platform alone to do that. Here are a few marketing strategies to consider. Social media. Use platforms like Instagram, Twitter, Facebook, and LinkedIn to promote your campaign and engage with your audience. Share information. Updates, behind-the-scenes content, and sneak peeks of your product will build excitement. Email marketing. Build an email list before you launch and keep your subscribers engaged with regular updates. When your campaign goes live, your email list will provide some of your first backers. Press and influencers. Reach out to bloggers, influencers, and media outlets in your niche to help spread the word. A well-timed article or shout-out can bring in a flood of new backers. 6. Engage with your backers. Once your campaign is live, your work isn't done. Keep your backers engaged by providing regular updates and showing your appreciation for their support. Whether it's progress updates, production timelines, or sneak peeks, let your backers feel like they're part of the journey. And if they comment or send messages, be sure to respond. Engagement builds trust, and trust leads to more support. Equity crowdfunding is an incredibly powerful way to raise money for your startup while maintaining control of your business. But it requires planning, legal compliance, and a strong community of investors who believe in your vision. By following these steps and staying transparent with your backers, you'll not only raise the funds you need but also build a passionate group of shareholders who are rooting for your success. If you found this helpful, smash the like, consider subscribing, and check out our other videos. See you next time.